CNBC quoted Mark Zandi, the chief economist at Moody's Analytics, this way: "You're not going to lose your battle against inflation with a pause here, but you could lose the financial system. So I don't get the logic for tightening policy in the current environment." Hi, this is Randy Kirk. This is Good News Friday for Tesla. Every week is Good News Friday for Tesla, even if there's bad news. I only report the good news on Friday. I'm kidding. Okay, if you like this kind of content, this is the day that we talk about the week financially, how the week ended financially, and give some expectations with regard to Tesla and how Tesla fits into the financial news. If you like the content, you know how to do the like and et cetera. But what I really am going to recommend right now, I'm really going to recommend that you subscribe and hit the notify button, because what we've got coming up is I did a series of interviews with Joe Justice. And these interviews are going to be newsbreakers. I promise you, all three will break news. You will love these three interviews. They are going to be so exciting and so fun. And they're going to come up on Sunday, I think Tuesday, and then Thursday, something like that. Definitely on Sunday. But the easy thing to do is just subscribe and hit notify. And that way you'll get every time that happens. I've also got another interview with Brian tomorrow, Brian Wong. It's phenomenal. Brian is so smart. Oh my gosh. So you want to be notified about that one as well. And then toward the end of the week, after all the ones with Joe Justice, I'm going to have another one with John, Dr. Know-It-All Biggs, and also with Scott Walter again. And we're going to talk about what Joe Justice talked about with regard to the robot, which will be, okay, just get ready for it because it's going to be huge. Okay, that's what's coming up next week on my channel. And that's why you need to subscribe and get notified about all this. Okay, let's go back to the quote from Moody's Analytics chief economist, Mark Zandi. I'm going to just read this for you. This might be one of those times when there is a difference between what they, the Fed, should do and what I think they will do, meaning he thinks they will do. They definitely should not tighten policy. In other words, they should not rise another 25 basis points, certainly not rise another 50 basis points. People are really on edge, and any little thing might push them over the edge. So I just don't get it. This is a quote again. Why can't you just pivot here a little and focus instead on financial stability? Zandi has been forecasting no rate hike, said it's highly unusual and dangerous to see monetary policy tightening under these kind of conditions. And then I'm going to repeat what I said at the beginning. You are not going to lose your battle against inflation with a pause here. Have I been saying this for 3 or 4 weeks? But you could lose the financial system. So I just don't get the logic for tightening policy in the current environment. Please tweet about it. Talk to your neighbor about it. Send emails about it. Talk to your congressman about it. The tightening needs to end now. And there also needs to be a passive statement on Wednesday about the future. We need a break in this crazy run-up that they've done on the interest rates. We've had a major inversion in the yield curve since last July, sometimes reaching 100 basis points of difference between the 2-year and the 10-year. Unprecedented for the time that it's been inverted and also for the amount that it was inverted. We're down now to where the inversion is only about 55 basis points, but that's still large and it's still going on. And what is that? What happens when you have that inversion? It hurts the interest rates that are charged to consumers and small businesses. The short-term interest rates affect car rates, credit card rates, and then small business rates that commonly are set using the 2-year as opposed to the 10-year, are using other systems that are based on the 2-year. So it's just nuts to continue to have these continued interest rates hikes by the Fed. They're destroying the economy. And the point that this guy is making, this Mark Zandi is making, is that you don't need to. It's okay. you got the risk and you got the reward, and then you got right now the risk is way higher on hurting the economy than it is on messing up this inflation issue that you're fighting, Mr. Fed. The risk is that the economy can be crushed. And yet, if you take the pivot, or if you even flatten out for now and say, you know what, we're going to hold off for 90 days. We're going to hold off for 120 days and see what happens with inflation. There's almost no risk in doing that. There's just almost zero risk, especially when you look at the inflation numbers. I've been saying this all week, and take a look at what happened with oil over the last week and a half. Oil is just down every single day. It hasn't been this low. I didn't look up the numbers, but it's been, I think it's been a couple of years since oil has been this low. I think it's temporary. I think there may be a play in oil. I don't do commodities, and I'm not an investment advisor, but the oil has dropped so much so fast. There might be a play in oil stocks or in oil commodities if you happen to love that in that world. But again, I would never advise with regard to commodities purchases because I don't know anything about it. All I know is what goes down commonly comes back up. So with the oil prices dropping that much, that means that gasoline prices eventually will feel that. Other kinds of refined products that come out of the oil world will feel that. And the result is going to be, it's going to trickle right through the economy, through transportation, through your food prices. Everything is affected by the price of oil. So I don't know what the Fed is looking for. I don't know what they need in order to at least pause, but they've had a bank crisis and they have every evidence that inflation is coming down, except for housing and for a few services outside of housing, a couple of services like college education and vacation services, that type of stuff. I mean, everything else is down, even eggs, as I mentioned on Wednesday. So, Mr. Fed, it's time to pivot. It's time to make a new decision. So that'll be on Tuesday. And then on Wednesday, I guess they'll make the announcement. And then on Thursday, they'll have their statement, which we will be looking for more passivity in the statement, even if they raise it 25 basis points, to put a cap on it and to say, look, we know that it's time to take a slightly different look. All right, now let's talk about Tesla. Well, Tesla did exactly what I said they would do. They followed the macro. Again, they always follow the macro. They go up more than the macro. When the macro is up, they go down more when the macro is down. And they did that all week, and they've been continuing to trade in this zone. And that is in the face of all kinds of good news. I mean, Berlin is expanding. They put in permits to expand the capacity of the Berlin facility from the original 1 million units to 2 million units per year. Now, that's pretty seriously good news, because what company would put in that request for a permit if they don't think they can sell that 2 million units in Europe? I ask you, let that sink in. Tesla believes fully that if they ramp to 2 million units, they're going to sell all 2 million units. That is bigger than Mercedes. Mercedes sells about 2 million a year. So Tesla is saying we can match Mercedes worldwide sales with just our one factory in Berlin within a couple of years as we ramp up to the 2 million. That's a pretty strong demand statement, don't you think? There are some rumors, I haven't seen absolute confirmation of this yet, but that Shanghai is clearing ground. So it looks like there's an expansion there, and Elon said there would be an expansion there. And they also talked about the fact that they would be making the new Gen 3 model there. We know that they've got groundbreaking taking place any day now in Mexico to make a couple of million units down in Mexico. I don't know how much more aggressive Tesla needs to sound before the world wakes up, before the street wakes up, before people wake up, that this is an incredible company. And everything, all the news, everything you hear every single day is positive. All the numbers on European sales right now are positive. The inventories are going down. The numbers in Shanghai and China, the numbers there are excellent. Numbers in terms of their overall sales are looking really, really good. I did mention the other day, there's a possibility that they're going to miss the street with regard to the overall quarter units sold or units produced, because the street, for some reason, has a high number on that, and maybe they're going to miss that. But the truth is that that's just going to be because the street is showing this high number. Not sure where they're coming up with the high number. So let's see here. I'm going to continue to hit this, bang this drum. Maybe you've heard me say it before. I'm sorry if I'm repeating what you've already heard me say. I think Tesla is now a value stock. I don't know what you need to do to change the perception of the street that this is no longer a growth risk stock. All right. They got $23 billion in the bank in cash and cash equivalents, something on that order. They have no debt. I want to say it's under $1 billion, and that's only debt that they need in order to do their leasing and all this kind of stuff. They've got basically no debt with $23 billion in the bank. In addition to that, their CapEx spend per year is huge as they grow factory after factory after factory, and yet they're still throwing off lots and lots of free cash flow even after all that CapEx spend. Now, maybe I'm just missing it. Put it in the comments below. What does a company need to do to convince the street that they're now a value proposition? They may still be a crazy growth proposition, growing at 50% a year when the rest of the auto industry is going down in numbers. That shouldn't be a problem. I would think that would be a good thing for Wall Street, to be able to be increasing their sales in the face of everybody else decreasing sales and still have all this money in the bank and throwing off all this free cash flow and no debt. What do you need to do to be considered a value stock, even if you continue to be considered a growth stock? I'm not sure. Comments below. What I can tell you for sure is, as always, it's been great talking to you. See you next time.